In this video, we're going to talk about the top 5 best funding options for small business owners. Most are alternative funding options that usually have more flexible terms and are easier to qualify for than traditional bank loans. With that said, each have their own pros and cons, so make sure to research each one to determine which is best for your business and current needs. As always, if you find the video helpful, please take a moment to hit the like and subscribe button to support the channel. Also make sure to request your free custom business funding plan in the description if you'd like to learn what the best funding and credit options are for your specific business and industry. Funding option number 1. Business line of credit. A business line of credit is a flexible form of financing that provides a business with access to a predetermined amount of funds that can be drawn upon as needed, similar to a credit card. This type of financing is typically offered by banks and other lenders, and is commonly used by businesses to help manage cash flow and cover short-term expenses. When a business is approved for a line of credit, they can draw funds up to a certain limit, but are only charged interest on the amount of money they actually use. The interest rate on a business line of credit is typically variable, meaning that it can change over time based on market conditions. Repayment of the line of credit works differently than a traditional term loan. The borrower only pays interest on the funds they have used, and must make minimum monthly payments to keep the account in good standing. The borrower can pay back the amount they've borrowed at any time, and once they do, they can draw on the line of credit again, up to their credit limit. Funding option number 2. Equipment financing. Equipment financing is a type of loan that businesses can use to purchase new or used equipment needed to operate their business. Equipment financing is usually provided by lenders who specialize in this type of financing, such as banks, leasing companies, and equipment manufacturers. The equipment being purchased serves as collateral for the loan, which means that if the borrower defaults on the loan, the lender can repossess the equipment to recover their losses. The terms of equipment financing can vary depending on the lender, the type of equipment being purchased, and the creditworthiness of the borrower. Generally, equipment financing offers a fixed interest rate and a set repayment period, which may range from a few months to several years. The borrower typically makes monthly payments on the loan until it is fully repaid, including any interest charges. Equipment financing can be a useful option for businesses that need to acquire equipment without depleting their cash reserves or taking on too much debt. Additionally, because the equipment itself serves as collateral, equipment financing can be easier to obtain than other types of financing. Funding option number 3. Invoice financing. Invoice financing, also known as accounts receivable financing, allows businesses to receive immediate payment for outstanding invoices from customers. Invoice financing is typically provided by third-party lenders who purchase the unpaid invoices from the business at a discount and provide immediate cash to the business. Invoice financing can be a useful option for businesses that need immediate cash flow to operate and grow. It can help businesses avoid long payment cycles and the costs associated with collections and invoice processing. Additionally, because the lender is purchasing the invoices rather than providing a loan, the business's creditworthiness is not a significant factor in the financing decision. However, businesses must be comfortable with allowing a third-party lender to interact with their customers in the collection of payments. Funding option number 4. Merchant cash advances. A merchant cash advance is a form of financing in which a business receives a lump sum payment in exchange for a portion of its future sales. Merchant cash advances are typically offered by alternative lenders and are commonly used by businesses that do not qualify for traditional loans or have difficulty obtaining financing through other means. Merchant cash advances are not considered loans, but rather a purchase of a portion of the business's future revenue. As such, they are not subject to the same regulations and disclosure requirements as traditional loans. Merchant cash advances can be an attractive option for businesses that need access to quick cash, as the application and approval process is often faster than traditional loans. However, the high fees and short repayment terms can be a burden for businesses, and it is important for business owners to carefully consider whether a merchant cash advance is the right choice for their particular situation. Funding option number 5. SBA Loans. An SBA loan is a type of loan that is guaranteed by the Small Business Administration, SBA, in the United States. The SBA works with approved lenders to provide financing to small businesses that may not qualify for traditional loans. SBA loans come in several different forms, each with its own eligibility requirements and repayment terms. The most common types of SBA loans are the 7, the 504, and the microloan program. SBA loans are designed to help small businesses access the capital they need to grow and succeed. By providing a government guarantee, The SBA encourages lenders to provide financing to businesses that might not qualify for traditional loans, making it easier for these businesses to access the funds they need to thrive. In conclusion, these are just a few of the different types of funding available to business owners. It's important to do your research to determine which one is best for your business and current needs. Also consider working with a business loan broker who can help you find the best funding option for your business. Click the links in the description to learn more about each of these different funding options and to connect with a loan broker. We hope you enjoyed this video and thank you for watching.